Boom shakalaka. Bitcoin price is all over the place. It's up, it's down. The bear market is over. The bull market is over. Today's video, I am joined by Bill Noble of Token Metrics to talk about exactly what's going on with Bitcoin today. The one thing you need to look at to determine the real direction of Bitcoin and cryptocurrencies, and lastly, the long-term outlook for Bitcoin and crypto. You definitely want to stay tuned. What up, Bill? Welcome back to the channel. Always a pleasure to have you.
Nice to be here.
Great.
I'm all right, man. I'm all right.
Great. So today we're going to be talking about everything that's going on with Bitcoin and cryptocurrency. And just to begin with, you clearly got my memo about matching t-shirts, right?
Oh, absolutely, dude. It's just like we got Crypto Love and we got Notorious Bill, man. We got the whole got the whole gamut covered.
Self-promoting. That's awesome. Yeah. So, okay, there's a whole bunch of stuff going on with cryptocurrency. Like, people think because maybe the price has gone up over a little bit over the past few days that maybe the bear market's over. Or, you know, me personally, I'm still a little bit hesitant. I'm waiting to get above the 100 weekly moving average until I say we have a change in direction. But what are your feeling about what's going on with crypto versus everything else going on?
Okay, well, crypto is a classic case study that everybody, bulls and bears, lose in bear markets. Like, everyone loses money. Like Friday, somebody was asking me, hey man, how come you don't tell us when to be short? And then you get what happened over the weekend, right? Even I thought, you know, like maybe Memorial Day night would be the top. And I look at my phone, I'm like, oh, up 10%. Well, that'll make for an interesting Tuesday morning. So people are getting hosed. And here's what happens when people get hosed. They either get emotional and start doing trades that they shouldn't, which I think is FOMOing in, thinking it's going up higher. Or if they want to sell, like either liquidate longs or get out of bad trades, or even maybe hedge and get short, they're like, oh, I'm scared. You know, like I can draw a chart that says, oh yeah, this thing might go higher. I did that yesterday. And then I'm like, well, wait a minute. Everybody likes it tidy, right? Everybody wants it to come to their level, genuflect, and then have the move unfold. But it's never tidy. So if you thought the market, this is the hard part of the market, right? Like up and down, question mark. Where to locate the trade? Question mark. That's why you need, you know, professionals to help you out. You know, that's why you need professionals, right?
Mm-hmm. Yeah, absolutely. I've been actually just keeping my eye on the markets page of Token Metrics because you can get the whole idea of like bear sentiment and how it's changing from day to day. So that's a really cool update. But so, I mean, what do you think is really causing these fluctuations in the market? Because, okay, me personally, I was like, when we were in the upper 30s, maybe around 40, I was like convinced that was the bottom based on-chain metrics. Like all the on-chain metrics is like, this literally is the bottom. And then it crashes through there. And then once we broke through the levels, particularly once Bitcoin broke below 30,000 and we had the nice double top there, I'm like, uh-oh, this is going really bad because we have a double top and could go way far down and all of a sudden pops right back up. Is it just exactly the opposite of what I'm expecting, or how does this thing work? What's causing it?
Well, okay. So if you have charts, right, and all the charts and levels broke, it was because of forced liquidation. So I think the way to explain what just happened was you cannot have the wealth destruction that you had with Luna in a sudden condensed period of time. Like I've heard 70 billion is destroyed. I've heard 250 billion. You know, we're hearing the retail carnage. There's undoubtedly institutional carnage. So after Luna, everyone goes, oh no, I have to liquidate. Margin calls, collateral, you know, we can't see it. And that's why it was so toxic. So that's why it was down only through every chart level that everybody had, because it was forced selling. Then, you know, people sell, they go, okay, I'm done. They go to the beach, and all of a sudden everybody in crypto goes, oh, well, there's no more selling, so I'm going to buy. And then they're like, well, okay, who am I going to buy from? The four sellers are at the beach. So it just levitates, right? Like the forced sellers push it down, they stop, and it levitates. Now, does that mean it's a reversal? Honestly, I don't know. What's my opinion? My guess as of today, June 1st, is that all the forced selling off something like that doesn't end in a day or a week or 2 weeks, right? If you have a destruction event like that, this guy launched Luna 2.0 right away because it's probably a distraction from the carnage that he created in the system, right? So he's got YouTube like, oh, Luna 2.0, or I could get all my money back in Luna.
Right.
I feel for you, but, is the destruction from that event over in 2 weeks? 08 took like a year.
Mm-hmm. Yeah. So we were talking the last time that you were on about correlations between like the 8 red candles and being severely oversold and having similarities to the 1929 crash. And so I was just having a blast, like looking up, trying to find causes of the 1929 crash on YouTube. And there's a bunch of theories, but a lot of people don't have any idea. So there was this one thing about the history of the US in 5 crashes. And it was talking about how all of the crashes, they had a new financial instrument, they had leverage trading, and then some type of like match, something that caused an event. So, I mean, with cryptocurrency, we have a new financial instrument. We definitely have leverage trading. So is this something where we could have an event similar to that?
Right. And don't forget NFTs, right? Like, we have like, I mean, part of that's the art market and part of that is just pure casino action, right?
Mm-hmm.
All right. So there's a book John Kenneth Galbraith wrote about the crash of 29. So you're right, leverage, froth, banks, proprietary trading in stocks, all kinds of stuff. The thing that strikes me about 29 was that as it started to crack, everybody started coming in and saying, don't worry, everything is all right. It'll come back soon. It'll come back soon. John Rockefeller came in and said, I'm not letting a Standard Oil of New Jersey go below $50, right? Everybody came in and said, everything is all right. And it wasn't. So, people talk about a relief rally. Okay, a relief rally is an absence of selling. Forced liquidators stop. Now, is it a relief rally? Is it like, oh, great, I don't have to worry about this bear market anymore. You turn your back on the bear and then. So I don't want to be a fudster, but if you look at the history of these down markets, when you get these everything is all right trades, particularly when you start mixing in the Fed and stuff we'll probably talk about later, you got to check yourself, your own head. It's like, do you think everything is all right? Do you look at the screen and go, oh man, I don't want to hear any more FUD. I don't want to hear any more red candles. Everything is all right. I've decided that.
Mm-hmm.
Careful with that.
Yeah, you got to check yourself before you wreck yourself.
Right.
So, I mean, I feel the same way. Like when I look back over the past couple years, it seemed like we had a very, very long frothy period in cryptocurrency. And this is the first time where it feels like we're in a bear market, where people have panicked. We have had some real capitulation. And, it reminds me. And then, I think back to 2018, 2019 in cryptocurrency. It's just kind of like a long, drawn out torture for a couple of years. So I mentioned earlier that getting back above the 100 weekly moving average is kind of like my line in the sand for when we're starting to head back up. Do you have anything that you're looking at to kind of give you an idea as to when we might see a recovery, if we're seeing one?
I actually think that depends on stocks, right? So, obviously stocks rallied before crypto bounced, right? So stocks would lead any reversal in crypto. And I think, I know this is weird, but I'm actually not particularly looking at technical metrics for is everything all right? Because I think, the better way to do it is to look at the technical metrics in stocks, because if stocks smell COVID part 3, if stocks smell, the Fed can't
Monkeypox
tighten.
part one.
Yeah, right. Monkeypox part one. It's the election and we don't want to be a bad guy. I have an opinion on that, but stocks never met any hopium that they didn't like. So if they stuff the hopium in the pipe and it continues to go up, that's going to hold up. That's going to hold up crypto, right? Mm-hmm. It's almost like, unfortunately, as a technical analyst, you're going to be getting your cues from stocks and the Fed about crypto.
Yeah. And it's definitely, it's a great point to take a look at, because I looked at the Dow Jones today and it's only down like 15% from all-time highs. And we look at these previous crashes, it was down, the smallest I think was like 20 some percent, but then 50%, 80 or 90% in some of them. So 15%, while it stinks, and while, I mean, there were trillions of dollars of money lost for American households, it's kind of like a drop in the pool compared with these doomsday scenarios we're looking at.
Yeah, I mean, they call it the internals of the stock market, highly speculative stuff like ARK and Cathie Wood. I mean, some of that stuff went back to its March 2020 levels. So there were components of the stock market that got wrecked. But here's the thing about stocks. Like, do you realize that as of today, June 1st, S&P and the Dow were unchanged for the month? So Jerome Powell comes out. He says, Paul Volcker was my hero. This is the guy that raised rates to 20% to stop inflation. He says, I want to slow down demand, right? Because prices don't go up by themselves, right? Rich people have money. Steak is $10, whatever. Steak's $14, whatever. 18, whatever. How do you get people to stop buying steak and move from steak to chicken? You got to wreck the equity market and you got to wreck real estate. So this is why there's a Fed between the president. It's not exactly a monetary policy expert, and the Fed. What they talk about? Golf? No. The Fed's like, Mr. President, I'm very sorry, but the equity market is stupid. I told them I want it down, and they're rallying it in my face, and I don't appreciate it. So I'm going to have to, I'm going to have to like ring the bell on these guys and explain it to them that we want this down. We want demand down so people can stop chasing higher prices. And there was a tweet on this yesterday. President Biden says, "Oh, I really respect the Fed's independence and I want them to do what they need to do." And I was like, wait a minute, it's going to take 24 hours for people to get this, right? Like, Mr. Powell is not happy with all the way down, all the way back because, oh yeah, the Fed's going to stop any day now. Wait a minute. Where'd they get that from? So if the equity market continues to go up and they're right, so I don't want to be dogmatic. If they're right, crypto's good. Okay. The day everyone figures out or thinks that, wow, this guy Powell might be serious or the economy's not slowing as much as everyone wants it to. Okay. And then you got to start asking yourself a couple questions like avalanche. Okay. Sorry. Go ahead.
Yeah, so first question I have is, why does he want the equity markets to go down? Because it's too frothy, because it's just inflated beyond its actual valuation. Why does he want that?
Okay. When he did his press conference, he said, I really can't control what happens with the price of wheat and oil. But what I can control is, he called it demand, right? Now, demand for what? Okay. Goods, cars, houses, steak, right? How do you slow down rich people? Let's face it. How do you slow down rich people? Well, you take their 401ks, you liquidate their margin longs, and you have them stay home and watch Netflix instead of paying $10 for gasoline to go rent summer houses, right? You just stop them. Now, nobody wants to see anybody get hurt and lose money, right? But the guy came out and said, Paul Volcker's my hero, and I want to reduce demand. And stocks are like, oh, well, let's rally it in your face. I'm like, okay, dude, don't fight the Fed. So he doesn't want to kill stocks. He wants to stop people with money from chasing prices, because prices don't go up by themselves. They go up because people with money just indiscriminately pay those prices.
Gotcha. Okay. Cool. So, how did he mention how long he thinks this type of thing is going to take? Because it seems to me like we're always like hanging on the words of the Fed, like what's going to happen this week, what's going to happen these 2 weeks. Did he give any type of time frame for this?
Well, no, but here's a guess. I mean, the first one is when and if we wreck equities in housing. So if we can wreck equities in housing in a month, we're done in a month. Okay. Yeah. If they can't wreck equities in housing, then what they're going to do is, okay, inflation was at 8%. It's probably going to top there, right? Let's assume that. And it'll go to 5 or 4. But you still have to raise rates to like 2 or 3, at least 2, right? That's like 3 or 4 more rate hikes, right? To get to like 2.5. So he told you he's doing 50 at every meeting until further notice, and he's going to do that. So if the next 50 basis point hike wrecks equities, he can stop. But, you cannot have inflation at 4 and rates at 1. You got to have inflation at 4 and rates at 3. And then it can moderate. But that would be the timeline.
So here's another question. In one of the videos that I was watching on the 1929 crash, they were talking about the discount rates back then being like really low at 3%. Nowadays, we're like at next to 0, pretty much the lowest they've ever been. And he's talking about bringing them up to 2 or 3%. What's the fear behind bringing them up higher? Is it just it would cause a lot of companies to go bust if they had to pay on their loans, or what's the deal with that?
All right, so that's a good question, right? So at a basic level, you'd start raising the price of car loans. You'd start raising interest rates on car loans. 30-year mortgage rates are high, but they could go higher. Credit card interest rates that are tied to, the rates that banks will loan you money. So if your credit card goes from, 18 to 25%, people with debt start to get hurt. So, I mean, when the Fed hikes rates, nothing good ever happens. And we don't know what kind of like leverage craziness is going on in crypto. And I think there's just the same lack of visibility in stocks and junk bonds. Now, again, a lot of big cap stocks were oversold and they bounced. All right. But like the joke I was making about crypto was from the movie that you may remember, Predator, which is there's, from Billy, the guide, who was like, there's something out there and it ain't no man, right? The invisible predator monster that they couldn't see. Now, is that over? Maybe. Let's hope so. I work for a crypto company, right? I'd love it if we could, get on token metrics and check out some of like the KuCoin index has got 2 great, decent looking picks today. So if crypto goes up, there might be something there. So I don't want any of this to happen. But, there was another movie, right, from when I was a kid, Jaws, right? Don't worry, it's safe to go back in the water. Everyone's telling the mayor of the town there's a shark. There's a shark, dude. There's a shark.
Mm-hmm.
Right.
Yeah.
Like, oh, don't worry about it. Go in the ocean. It's good for business.
Yeah, right.
All right.
It's like Memorial Day or whatever.
Right. Yeah. There's a difference between FUD and applying common sense to trading. Like if the market continues to go up, token metrics will give you the things to be long. But if you wake up one day and you thought it was going to go to this level, but it falls short and starts going down. Mm-hmm. Like a lot of trading types that got the down move right, that's what they're thinking. Like Solana up to 50. I was like, oh, okay. So part of me thinks if Solana gets to 50, you don't want to be shorted. So, the other thing you have to ask yourself in crypto is this useful, right? If there's a problem with DeFi and NFTs are a little frothy, what exactly do I need 6 layer ones for?
Very true.
Right. Nobody owned layer ones in 2021, even the smart crypto people. Nobody had any idea. They all exploded. Now layer ones are blue chip, which is funny, right? Like
Mhm.
Coca-Cola is blue chip because it's been around forever. I'm not sure the stuff that went up last year is blue chip just because it went up last year.
Mhm. Well,
So,
yeah, I mean, that's very true. There was a chart that I was looking at last week where somebody took a look at all the coins in the top 10 on Coin Market Cap. The average
right.
time they spent there is 19 weeks, which is, and these are all blue chips. So
Right, right.
yeah.
So, I mean, it's like, it's like, look, check your terminology. Is this useful? Right? Like, what
Mhm.
exactly is it do I need to do on these blockchains?
Yeah.
It's
So
it's software.
yeah. So I guess what then is the play now? Is it just, are we kind of in like a holding pattern? That's how I kind of feel. Is like just being patient, see what's going to happen, because people ask, is the price going up or is the price going down? And I'm like, I'm 50-50. I'm like, there are great reasons for it to go up and there are great reasons for it to go down. So, what do you
Right.
think?
So, okay. Well, I think I'm going to invoke something my father used to say. If you don't know what to do, don't do anything. Right. Because everybody's all emotional, right? Like, I'm getting all kinds of mail, right? Like, thank you for saving my kids' college fund. And because of you, I sold the bottom and got wrecked. I'm getting everybody's
Awesome.
really emotional. So if you feel like you can't trade in a calm manner, believe me, you're not the only one, dude.
Mhm.
Don't do anything. Now, in terms of like what's next, is it going to go up or down? What I think it's going to do is I think it's just going to surprise people. So that means if it goes up, it's going to go up more than anyone thinks, and ETH is going to go to like 2,200. Because let's face it, ETH's holding this merge thing is holding up the whole market.
Mhm.
Right? There might have been forced liquidation in ETH, but the only reason it just didn't turn around and go back down was because I think there's a bid for ETH because there's no bid for anything else. So it's either going to go up way more than people think, or it's going to catch everyone sleeping at the payroll number, right? So everyone's waiting for it to go higher and they're too afraid to be short. And all of a sudden you wake up one day and I think that depends very much on stocks, right? Like if stocks start to give it up, then you have to watch out for the vanishing act in crypto. So I still think you got to cue this. Like stocks didn't matter before, and I actually think they do now. Because look, you got payroll number coming up, right? And then inflation's after that. So these economic numbers that didn't used to matter for crypto, they matter now. And unfortunately, that makes the market even more of a crapshoot because it's like, what's the number? What's the expectation off the number? What's the whisper number about the expectation? Blah, 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 blah. So it's hard. And here's like my net. If you look at your position and you were down and now you're not as down and you need to sleep at night, reduce risk. Okay. If you're feeling the need to FOMO in, well, you know what? You could be right. FOMO in, put a stop. And then if you get stopped out, that you got stopped out may help get you out of the fog, right? So, you don't have to go out and, people in crypto, I have to put the rent money and my grandma's savings in, or I have to get out and hide under the desk. There's a middle ground. If you use that middle ground, you'll be able to figure out price discovery. And most importantly, you'll be able to manage your emotions, which will help make you even more accurate, right? And of course, token metrics can help you with that, both on the long side in the indices and, on the downside, like with that market indicator page that we have.
Mm-hmm. Yeah, and also the newsletters are awesome because they keep you up to date with exactly what's going on. So, and I'll post a link down in the description for anyone who wants to check out token metrics. Okay, one of the final questions I have. So, despite what's going on in the short to medium term with this bear market, crypto winter, pain, or even, a complete rebound in the price, still optimistic long-term Bitcoin and cryptocurrencies?
Oh, absolutely. Absolutely. Like go back to the .com crash, right? So at the top, Amazon would have had to have sold every book in the world 1.5 times in order to justify the price. because remember, it was just books at the time. So, okay, at the top, it was pretty stupid. Then at the bottom, no one wanted it, 2002. Nobody, including Warren Buffett, would touch the Google IPO a couple of years later. So isn't it funny that right as all of that, the internet, Web 2, as all of that was making a long-term mega bottom, no one wanted to touch it, right? So if Bitcoin and crypto is like the future of money and technology, ironically, there will be massive revulsion, rage quitting when it's over. Like it'll go down. I think this is kind of more of a massive margin call over a period of time rather than that 2019 winterish type stuff. But, you know, we'll see. But normally at the point where people go, oh my God, I'm never touching that again. That's the point where, you know, you just wake up one day and people are like, oh my God, there's a problem with the dollar, euro, yen, whatever. I need crypto. But it's ironic that historically you get massive revulsion, right, before that turn happens. And that's the tough part, right?
Yeah. When you were saying that, I was imagining like if Bitcoin went back to $3,000, like previous lows, oh, we could definitely feel some revulsion then. And then
well, or if there's guys get liquidated and you have wild price action, like it doesn't have to go back to 3 to disturb everybody. It might, you know, people might get upset if it went below 20, and they would probably lose their mind if it went below 10. Yeah. Right? I mean, can you see the headlines? Oh my God, Bitcoin below 10, Bitcoin illegal, Bitcoin is
yeah. And with the $21,000 margin call that Michael Saylor has on Bitcoin, if they're forced to sell, which they say they have, you know, Bitcoin they could use to cover, but let's say that he's everybody's rock. So if he's forced to sell, then woof, and the price going down, yeah.
Right.
But I think
at which point you want to be standing down there to catch some of that, right?
Yeah, I mean, right.
No, it's forced selling is frequently, you know, people like in their mind, they see forced selling and they go, oh, this must be because of something. Something must be wrong with crypto. No, dude, it's just forced selling. It's just a good old fashioned margin call like 29. It's like, oh, you guys are levered long stocks? Huh, excellent. You're liquidated. Down more, you're liquidated, right? Because I mean, the thing about Bitcoin is the thing that everyone owns. And if it really does turn down, it isn't sell what you want to, because no one wants to sell Bitcoin. It's sell what you can to protect yourself. And the liquidity is in Bitcoin and ETH. So if everybody starts selling Bitcoin to protect themselves, and that starts triggering margin calls, that's how you get a mess. Now, again, not trying to be a fudster, but when that's over, whether that's yesterday or 6 months from now, people will like see the price action and be like, oh, you know, there's something wrong with it. No, there's nothing wrong with it. Everyone just mistimed the trade. That's all. You know, whoever loaned money to Michael Saylor, oh, Mike, here you go. You need 200 million? No problem. Just have the physical, just the collateral's the physical Bitcoin. So if you get liquidated, just the physical Bitcoin goes on my balance sheet. I don't have to worry about it. Right? Yeah. So crypto's fine long term. Crypto's great.
That's good to know. It's good to know because it's one of those things where just kind of adjusting the time frame. Like when the markets are falling and when they're choppy and when you look at whatever and it seems like you lose money, all of a sudden that long time frame disappears. But when you can zoom back out and just be like, okay, if I can just get through this, if I can just, you know, do whatever I need to do until it corrects itself, then things are golden.
Yeah. I mean, look, you got to keep your capital and your sanity because the whole world could lose both. And you don't want to be included. You don't want to lose your capital and your sanity because when this thing stops, whether it stopped, I don't know, 2 days ago, or it stops in October, November, I don't know, right? I have to be the crystal ball guy, but the crystal ball's in the shop for like 4 days.
Mhm.
But the thing is, you want to be there when it turns,
Mhm.
right? You want to be there. Like, I'm not just when it turns like, oh my God, I missed it. It's up 3%. I missed it. No, I'm talking about the turn where this actually becomes the future of money and technology.
Mhm. And I definitely think that there is a moment that's very clear, because I remember back when Bitcoin was like $10,000 before it took off to $65,000. It was very clear that like this is the moment. So I think at least my takeaway would be, if you're not sure, then do what your dad says, don't do anything.
Yeah. Yeah. Don't do anything. Save your capital, save your sanity. Just remember that markets love symmetry. So if way back at 10,000, you were like, oh my God, this is the moment. There can be this is the moment the other way, right? Right.
Oh yeah.
This is the, Bitcoin Miami, the first crypto conference after, the pandemic was, I don't know, man, that was one of the greatest experiences of my career. Okay. Now, what would that look like in the reverse? I'm afraid to know.
Mm-hmm.
But
yeah,
you don't want anything like that to impact how you feel about crypto long term. And most importantly, you want to have the capital to be able to just come in when all these guys are selling because they have to. And that's where you come in and just go, oh, thank you so much. I have some for my kid and my mom. That's what you want to be able to do.
Mm-hmm. Awesome. Well, I think that's a great point to end it. Anything else that you wanted to mention while you're here?
No, sir. I just think that pretty much covers it. Like this market can make fools out of professionals. So if you feel like you lost money, you have something in common with every great trader out there. If you bought the high and sold the low, everyone's done it. Everyone gets caught. No one gets by the bear without getting some grief. So everybody loses money in markets like this. If it happened to you, it happened to me.
Mm-hmm.
It's okay.
Yep. We're all there together. Just, keep your head on straight. Well, Bill, it's been an absolute pleasure yet again. I've loved that we've had the same color shirt on the whole time.
That's right. That's right.
And I know I've learned so much, so I'm sure everybody else has learned so much. So really, from the bottom of my heart and from everybody out there, thank you so much for coming on the channel again.
Yeah, thanks for having me, man. I always appreciate it.
All right. Peace.